Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have back the CEO, Atul Sabharwal from Snipp Interactive. Snipp trades on the TSX Venture Exchange under the symbol SPN and on the OTC under SNIPF. The company is currently trading at 21 cents with roughly 282 million shares outstanding, or about a $59 million market cap. I'd now hand it over to Paul Andriola.
Thanks a lot, Trevor. Yeah, great to have Atul back. It's been a little while since we've last spoken. Clearly, there's been a lot of things that have happened with the business, so we thought it'd be a great time to have you back and refresh everybody. Well, refresh everybody in terms of what the business is all about, but more importantly, update everybody on some of the progress that you've seen over the last little while. So, Atul, welcome, and I'm just going to hand it over to you. You've got your presentation ready to go, and I'll let you go whenever you're ready.
Yep, thanks, Paul. Appreciate you having us back. Paul, can you remind me the last time I spoke on this forum?
I'm going to say it was about eight months or so ago. Yeah.
Oh my God, that's a long time. Okay, a lot has changed. Exciting stuff. I'm going to take a little bit more time on the presentation before I open it up. So thanks everybody for taking the time today. Just a quick refresher for those who know us and for those who don't. We run a tech platform that enables some of the largest companies in the world to very simply acquire, retain, and engage customers. We have a pretty slick tech stack that enables them to run all sorts of different marketing tactics that allow them to engage with their customers. As a brief summary of where the company's at, we see ourselves as one of the leaders in the global receipt processing industry. What that means is we allow users to take a photograph of their purchase receipt or send us an email with the receipt, and we can then incentivize them in multiple different ways. And this particular tactic was the founding engine of the company, around which we have built multiple solutions that are now used by pretty marquee base of clients such as Nestle, Microsoft, Kellogg's, Procter & Gamble. And it's growing day by day, right? Not only in the US market where we were core, but also overseas and into newer industries, not related to the core CPG, consumer products groups that we used to work with before. The good news is the company is still profitable, still debt-free. We've had 10 consecutive quarters of running a profitable EBITDA business. Our margins are at the 50% mark. And we generate cash. We have about close to $7 million US of cash on our balance sheet as of today. We just declared our second quarter and for 2022, and it was 81% year-on-year growth. Our backlog, which is our contract signed into the future, grew 16% compared to the same time last year. We also did a investment round, a strategic investor called Bally Interactive, which runs a chain of land-based casinos, a chain of digital casinos in North America, as well as they own, I think, 6 sports stations that they bought from Fox Sports, made an investment in us, and I'll talk about that in a bit. One of the other highlights is that we bought a company called Gambit, which actually represented 14% of our revenues in the second quarter. So really excited about all of the momentum that we've had, and we totally expect this to continue into the near term, right? So just as a quick overview, we're about 80 people now in 5 countries. We have more like 93 clients, unique, done over 4,000 programs, and we are listed on the Toronto Stock Exchange. In terms of the cap structure, there are 280 million outstanding shares. We know that's a large number, and we are going to take steps to fix the outstanding shares as our share price continues to appreciate. This all started off with our first conversation, I think maybe more than 12 months back on this forum. And so I'm kind of biased to coming here and talking to you guys because it always gives us some amount of good luck. So 38%, about 40% of the company is still owned by Snipp insiders. Bally's, as I mentioned, is a 10% strategic owner now. So it's a nice big float, but it's quite consolidated. We, like I spoke about, we have 85% revenue growth year on year for the second quarter, 7 million cash in hand. We're very, very focused on fixing the valuation in the market on our stock. We trade significantly lower than most of our peers on the Toronto Stock Exchange or on the NASDAQ. The uniqueness of our business is we are actually profitable, but we don't seem to be getting the uplift in the markets on a valuation basis, probably related to the outstanding shares that we have to take care of at some point. So we're working on strategies to do that. We've seen multiple near-term growth opportunities. As an example, Bally's that invested in us, they don't have any kind of marketing platform today across any of their casinos that allows them to see a centralized view of their customer. We're helping them implement something like that across multiple properties. We're just starting with the first one, but they have 35 properties in their portfolio that we can go after. So there's a massive amount of growth that's possible that's being built into the business now as the days go by. The first half of this year was great. I mean, the highlight to this slide is that we grew the business 73% in the first half of 2022 when compared to 2021, and our revenue streams are increasingly SaaS based. So nice SaaS long-term recurring contracts. That's at about the 50% mark. We are expanding with our existing clients in new geographies, but also attracting new clients, not only in America. Bally's is a great example where we do no work in the gaming industry or the casino industry, but also clients overseas who are now increasingly looking at the work that we've done in North America and saying, wow, it's very applicable to our business here in Asia and in Europe, right? Some of our clients are household names. Most of our clients are household names, I should say. But increasingly we are seeing also a lot of larger B2B types of companies coming to us, talking to us about how we can help them optimize their channels, optimize their inventory situation. We've got a tech stack that is uniquely capable of solving various types of problems related not only to a consumer shopping for product, but also for a distributor distributing product. So quite excited by the B2B kind of addition to our business, where traditionally it's been more B2C kind of companies coming to us. We have worked with 13 of the top 15 global consumer good companies out there, and that's going to continue. With one of these companies that we announced, I think yesterday, which is a large American beverage company. We actually deployed out into 9 countries today. So they just renewed their contract for this year, so we're pretty happy about that. In terms of our technology stack, right? We have a few different types of engines that, to simplify the world of technology into a simple statement, these engines basically can be put together just like Lego bricks to run any kind of marketing program that a client wants to run in order to acquire, retain, or engage a customer on the business to consumer side, right? So think about, from our perspective, loyalty programs, cashback programs, gift with purchases. These are all great programs that have been around for centuries, but there's never been one enterprise class software solution like an ERP that enabled clients to do that and then harness the collective power of that unified data set. We are at the forefront of that, and as the world of ad tech becomes more privacy oriented and cookies go away, the kind of data that our platform generates for them becomes increasingly critical. And that's what's driving some of the growth that you're seeing in our business. Like I was mentioning, our platform can really be used in multiple different ways. And that's really our core strength. So in terms of highlighting some of these applications, you can see here a variety of different brands for whom we run today, a variety of different types of programs which meet different types of objectives of these clients. And just to make a point here, it's not just about large brands, right? We also work with some smaller brands too. As our platform has become more robust and the permutations and combinations of things that you can do with our platform has increased, we're attracting an increasingly diverse set of customers to the platform. On this page, you can see a utility customer, you can see a market research customer, you can see a mall, right? All who use our platform, same platform, for very different kinds of marketing objectives. Okay, so to talk about the market for a bit, we're just at the beginning of this journey in some ways, because it's a massive market. It's $160 billion that gets spent in the world on MarTech. And, we are playing in the incentive and the loyalty space today, which is a substantial portion of that. So there's a lot of runway for us to continue building out Snipp and getting to, a 100 million run rate, 150 million in revenue run rate. And we're already doing it at a small scale, which is where we are today. We did about 15 million in revenue last year. We're already doing it at a small scale, but we're doing it profitably. So, as we continue to build this business, our ability to take our own cash and put it back to further accelerate increases. And you're seeing some of those trends now in our last acquisition with Gambit rewards, as well as the fact that as companies like Bally's come in and they see the criticality of the infrastructure that we can support, they are putting cash into the company to help us build it out faster, right? So we're very excited about everything that's going on. I think, 8 months back, I came in and said, I'm going to be very happy. I can probably say that earlier in this conversation, because I'm sure Paul's going to ask me at the end of the call what my views are. I'm going to tell you, people are going to be happy, right? There's another quarter that's coming to an end. We're in the third quarter right now. And we're just sitting out here, working our butts off and, actually showing the world what this platform is capable of as we build it. In terms of data, actually the true treasure in this company is the data coming out of the platform, right? And the data that our clients get to use to make better, more intelligent decisions. Today we play really in the marketing tech space, but the data enables us to actually creep into even larger markets that build on this data. So if you think about what happens on our platform, people are shopping, people are submitting their purchase receipts. We're getting invoices from distributors who are selling things because they want incentives or coupons or cashback offers. All of that data about what people buy, right? That's the gross merchandise value spending. And you're seeing the amount of GMV that flows through our system is quite enormous for a small company like ours, because we're seeing all those purchase data, elements of data, right? It actually allows us to do smarter advertising, targeting, better research, for clients should we move into those verticals. So this slide is really just about the potential that is inherently built into this company. And, it's really, we're sitting here thinking about, we've got money now, we've got capital, we've got all of these great clients, where to place our bets that are the low-hanging fruits, not just in our world, but in other parts of the business, that, in other businesses and segments that can leverage the data that we've been collecting. Okay, so just as a very quick, I'm 13 minutes into this conversation, right? Let's talk about Gambit for a second, right? We bought this company in February. Everybody was like, what the hell is Gambit, right? And it's really a fascinating story here. So Gambit is the first and only solution in the market that allows users to take their loyalty points. Think about it, you're all members of some loyalty program. The world of Snipp can implement loyalty programs. Awesome. We have the tech, the software, everything to do that, and we're doing it for multiple clients, right? But now we have clients who have, 8 million people in the program, as an example. What do you do with those 8 million people to keep them coming back and collecting more points? All of us are members of an airline program. All of us are members of a hotel program for Marriott, etc. And all of those programs allow you to do a few different things with your points. They allow you to book a plane ticket for free. They allow you to book a hotel room for free. But they also allow you to get a Walmart card for free or buy an Apple Watch and get an Uber ride for free, right? Awesome. Part of our business is providing those incentives in our engines that I was talking about earlier. But every time I distribute a Walmart gift card or an Uber ride home, I have to pay Walmart and Uber, right? Now, what if I was the Walmart? Or what if I was the Uber, where people were playing on my own platform, right? That's what Gambit is. Gambit allows you to take the points in a loyalty program and actually place bets on tonight's Lakers game or tonight's Wizards game. And in the process of doing that, it's a fun, engaging way to use your points to do sports betting, which is a massively growing industry, but also a way for me to be the Walmart of that industry, for the simple reason that instead of me paying Walmart a $5 check for that incentive that I was providing to, say, Kellogg, I'm now getting those $5 and I've become the house. It also gives us, most importantly, the data about the user that I now own free and clear to leverage as I see fit. So Gambit is really the first free-to-play platform in America that allows you to take loyalty points and place bets on sporting events. And we cover all kinds of sporting events, from the Premier League to Champions, League, to like the NFL, the NHL. We just on this Saturday we did our first bare knuckle fight. It's a new network coming up in America right now. They have 25 million viewers, but you could go place bets on their fights, right? It's a really cool platform. I encourage you all to check it out. It's gambitrewards.com. But you can only play if you're converting your loyalty points. You don't have to pay us any cash, right? So this platform is such an attractive platform because when we go to clients who have loyalty programs, they're all looking for something new to give their users to keep them engaged. Everybody can get an Uber ride and a Walmart card and an Apple Watch, from their loyalty programs, but they can't bet their points to make even more points and cash out for cash. We now enable that. B, for those clients of ours, like Bally's, who actually don't have loyalty programs, hey, guess who can put that in for you too? We actually met them through Gambit. And they were so impressed. They're like, okay, you know what? We're making a strategic investment in you guys because we need to put that platform in to unify all of our properties. And guess what? Bally's can only operate in 6 different states today. But on Gambit, because it's not actually a betting platform, since they're not taking your cash, they can now operate in all 48 states, not 50 because the way it's structured, but we can get them exposure to allow their players to actually, I live in Maryland, drive up to Atlantic City, play a slot game play blackjack at the casino, drive back to Maryland, and then use my points to place a bet online. But my payoff is more points, but I can exchange those points for cash. So it's a really interesting operation for us. It allows us to get into the data business even more deeply because I now own the consumer and the profile, but it also opens up a whole new market for us. The Bally's investment, just quickly, was a $5 million investment. This is all US dollars. They own now 9% of the company. We are deploying out our solutions across their properties. They are the gaming partner for Gambit, and it allows us to also access all of the different players in the Bally's network of casinos, who we can now leverage on the Gambit platform. So in terms of summarizing our business today, we continue to focus on our core bread and butter, which is driving our Snipp Care, the customer acquisition, retention, and engagement platform. That and building out, a loyalty platform for clients is an imperative for all of our clients. As cookies go away, they need to build these platforms that enables them to harness data directly, because they can't target people like they used to, given all the privacy laws coming in. We continue to see longer term contracts from our clients, so we want to accelerate that long-term recurring revenue shift. Everybody used to tell me 3 years back or 4 years back, your revenue quality is horrible because you don't have long-term recurring. Okay, they're all pilot contracts. You can now see them transitioning to long-term recurring contracts. We're definitely developing the Gambit asset. We would now own the data free and clear. It allows us to get into market research. It allows us to get into ad-based media targeting. There are a lot of different elements that we can leverage in audience that we own. As an example, we do about 400 programs a year. I don't place media for my clients for the programs that we run for them. If I now can build Gambit into a portal that has a couple of million users, I can now charge clients, to place the media and target those users. And if I have 400 programs and I get into the media business, Even half of my clients pay me $100,000 per program for media. That's just low-hanging fruit revenue. One of our board members, Tom Burgess, stepped off our board and has come in to Snipp as president of Snipp Media. We did that last year, and he's building out our media strategy to add on top of our core Snipp business. We're looking at making some focused acquisitions here because now we can, add complementary revenue streams into the business. And with all of our clients, we continue to land and expand our share of wallet with them, not only in terms of the solutions we can sell them in our broad solution set, but also in the geographies that we can service them. So that's us in the last 8 months.
Fantastic. So it's been a slow 8 months. That's what you're telling us. I'm kidding. You mentioned M&A, right? Right off the top of my head here, I'm sort of wondering where are you looking? Like what do you want to bolt on? What areas of the industry are you most interested in?
Let me quick question, Paul. So think of it as we can do things on the front end or we can do things on the back end, right? Let me explain that in a second. We do, like I was saying, 300 to 400 programs a year. The two things that we don't do for our clients, we don't do the media design and the creative design. So we don't do the creative design for these programs. We're not an ad agency. We also don't do any ad tech. We don't target Paul to say, hey, Paul, if you spend $30 here, you're going to get $5 back, right? That ad tech, we've actually got an initiative going, like I just mentioned, called Snipp Media, allows me to tell my clients, hey, I'm doing everything for you post creative and media spend. The minute someone clicks, the minute someone texts in, the minute someone sees an ad on TV, right? It's a very short skip and jump for me to tell them, hey, let me place your media for you too, because I actually have better data about where Paul saw my ad because I have all the infrastructure running on the back end, right? So making an acquisition like that where we could get into the media business, like, and do the maths. I mean, for 400 programs, if half my clients spent $100,000 on media with us, they're spending anywhere from $50,000 to $2 million of media for the same programs that I'm running for them, right? So, if you look at any of these programs, there's a lot of media spend behind these programs, right? I don't touch it. I could. That would be one example of a great acquisition I could make, right? Or take data analytics and, we've got a whole bunch of initiatives internally about how to creating the data set is one thing, but then analyzing that data set, right? And providing the insights is a whole other thing, right? You have, there's a whole genre of companies that simply suck in the data and then predictive analysis, et cetera, et cetera. So there are units there that we could pick up on the bottom of our programs as an example to add on. Or just think about geographic coverage, right? Like these companies sell through 185 countries. They have to acquire, retain, and engage customers globally. So the iPhone 14 just launched. Even if it's more prevalent in the US, it's not. It's prevalent everywhere. But the point is the network's as fast everywhere in the world now. Digital data harnessing and collection. So buying a smaller company like ours in a different jurisdiction, is another simple add-on for us.
That makes sense. Let's jump back to Gambit here for a second. I saw that your last quarter, you actually mentioned that some of your expenses were really geared towards getting Gambit going and growing. How do we look at that going forward? How much capital or sort of resources do you envision allocating to Gambit to move it forward?
So, our strategy with Gambit, it's a classic business to consumer play, but the difference is that the revenue model is based on loyalty program X paying Gambit for tokens, just like they would pay Uber for a $5 card or Walmart for a $5 card or Amazon for a $5 gift card, right? So the good part about Gambit is we don't actually have to spend a lot of money on user acquisition because the revenue comes from a business, not from the consumer. I'm not in the legal betting space, right? I'm not asking Paul to store his credit card. You need licenses for that. That's a very heavily regulated industry, right? I am going to a loyalty company and saying, hey, give away tokens, right? Pay for the tokens. So in terms of answering a question, now is how much do we, spend on growing Gambit, right? Our growth expenditure on Gambit is not going to be high from an acquisition of customer perspective, which is typically the highest cost of a business to consumer business, right? It's going to be on how much of those tokens that we have received now that are bet are paid out. So in the worst case, you could look at the economics of a casino business and say the house keeps 7% at the very least, right? But that consumer now is my consumer at Gambit that I can direct into any one of these programs and get paid for from a media perspective, right? Or I can leverage in other ways. Like this morning, we launched in the Gambit platform, we haven't announced it, the ability for our users to go out and do surveys, right? Which are paid surveys. Every time they complete a survey, we get paid. They get free tokens, right? So our user acquisition costs are a function of how many businesses we can get into that have loyalty programs that want to provide Gambit as an incentive. So it's not a traditional, we need like 40 million to acquire users. I mean, I can't afford that kind of stuff, right?
Gotcha. Clearly the last sort of 6 to 12 months have been different from an economic standpoint. Chatter about recession, chatter about a bunch of different things right now. Where are your challenges as you grow your business? What are you seeing as your biggest sort of hurdles right now?
So until, it still is, the biggest hurdle for us has been finding people. I think I said this to you last time. It's been a really, really difficult, expensive period where you just couldn't find good people or could convince people to come in at reasonable costs, right? And that is kind of changing a little bit with all of this chatter on recession, etc. In general, recessions haven't hurt us a heck of a lot because when recessions come in, people need to do more marketing tactics to convince you to buy their product versus someone else's, right? So we tend to drive more promotions in those kinds of periods, right? So we still have a problem handling growth because we need to invest in the people layer to enable that. And finding people has not been easy. So we've made a few strategic hires over the last 6-7 months. We hired a CMO, our first chief marketing officer in the history of our company, right? It took a long time to nail that deal. I was talking to that person for 2 years, So it's really the thing that keeps me up at night is not so much the economy turning as much as, can you find the right people fast enough to exploit opportunities?
Fair enough. And then, so let's look forward now. All the investors that are listening right now, what sort of milestone or catalyst do you think we should pay the most attention to sort of validate that you're continuing to execute properly?
I think at this stage our core goal is revenue growth, right? We want to grow profitably, like I've told everybody. We've got so for us, the first key milestone is, can we continue this growth engine? We're just starting the growth engine, right? Like now, it's been growing quite nicely. We grew last year quite significantly. Our quarter-on-quarter growth has been quite good, but can we sustain this if in terms of, now we have another business that we've bought into the company, right? And can we monetize that quickly, right? So that's our primary function, primary goal, right? And we want to grow it profitably without losing money. We are willing and are going to and have been sacrificing margins to get there because we're reinvesting in the business at a more rapid rate, right? So last quarter, I think we had a 40% margin. This quarter we should be higher than that for sure. But we also have 7 million of capital sitting on our balance sheet, right? So should we reinvest our margins? Should we take our capital and grow faster? Right now we're not investing capital. We only invest our capital in really strategic opportunities that can, be step functions for the business. But using our own cash, this is what we've been doing for 2 years. This is the first time in the history of our company where we've had the luxury of having this kind of capital sitting on our balance sheet, right? So we've built it, as Paul, over the last few years, in terms of talking with you and the great people on in your calls, right? So using that using our own capital to grow. So the metric, revenue growth, number one. The other, sorry, can you hear me still?
Yep, you're still there. Yep.
All right, cool. So revenue growth is number one, right?
Mhm.
Number two is staying EBITDA neutral. If both those metrics are working, we have a really, really bright future.
Fantastic. Well, good. Listen, I mean, we know the business fairly well, but is there any sort of key message or anything that you want to make sure that everybody really understands going forward about the business?
I mean, it's the same thing as I already said it, right? You guys are going to be happy, right? I mean, like we are a steady. We're continuing to grow the business profitably at a measured pace, so that we can, actually get to a valuation to begin with that is fair and reflects the growth rate that we've had. So, that would be my message to everybody, which is, we want to grow this company at 50%, be profitable, build out our consumer business around the Gambit platform, add in a media business to exploit the fact that we do so many programs annually. So low-hanging fruit for us if we can build that out not with services, but in a technical format, because the margins are much better, right?
Mm-hmm.
So the only message I would say is that don't get shocked if margins are in the 40% range, because that's the feedback I got after our second quarter. And we were like, we just grew the business 80% and we sacrificed our own margins to get there. We're still profitable. We still built our cash balance over and above what the investors gave us. But the chatter was, oh my God, you're sacrificing margins. Like, well, 40% is a good margin business right now, actually. I don't think it's not a bad margin business. Yes, I have a 70% margin business, which is our enterprise software business. Now I'm building a consumer business. And I'm going to leverage this for that, because once this business gets to an audience size, which is respectable, wow, I can do so much more with them for my own programs too.
Mm-hmm. Mm-hmm.
So stay with us.
Absolutely. Perfect. Good place to end this conversation. Atul, thank you so much. We've been speaking with CEO Atul Sabharwal, Snipp Interactive, SPN on the Venture Exchange. Atul, listen, we're looking forward to catching up with you with the next meaningful update.
Yep. Thanks, guys. Appreciate being back here. And yeah, thank you everybody for attending.
You're welcome.
Take care. Bye-bye.